You've probably heard of BlackRock, $10 trillion, the Aladdin supercomputer, Larry Fink's annual letter to every CEO on Earth. Everyone looks at them as the ultimate boss of capitalism. But that's a massive miscalculation, because while the world was watching BlackRock's digital empire of stocks, its twin was pulling off a much more aggressive move. A physical one. BlackRock controls the invisible financial layer, but its silent partner decided to lock down the concrete, the actual ground you walk on. I'm talking about the building where you pay rent, the warehouse that handled your package this morning, and the data centers running the AI revolution. They're called Blackstone. They manage $1.2 trillion in real physical assets. What I find wild isn't just the number. It's how they've built an invisible toll system on pretty much every basic necessity of your life. Whatever you do today, you're making them richer. And you don't even see their name on a label. Here is the question I want you to keep in the back of your mind moving forward. How does a company with no product and no storefront end up collecting a toll every single time you live your life? Forget the usual conspiracy theories. This is a cold look at pure financial engineering. And by the time we finish, I promise you won't look at a lease agreement, a delivery truck, or a hotel lobby the same way again. This is Titan Theory. Stephen Schwarzman and Larry Fink didn't start out as rivals. They started as a team. Back in 1985, both were grinding it out at Lehman Brothers. Fink was the mortgage golden boy. Schwarzman was the ultimate deal maker. And they had a shared vision. Take over private capital markets by going straight into the physical world, owning real things. Alongside Pete Peterson, Schwarzman set the whole thing up, the Blackstone Group. $400,000, a small office, and one foundational read. Most investors chase growth. Schwarzman chased necessity. Shelter, healthcare, logistics. The boring stuff people keep paying for, even when markets are crashing, because they have no choice. But Fink had a different take. He saw power in owning the intelligence layer above those assets. The software, the data. Two completely different bets on the future of finance. By 1994, those two bets became impossible to run under the same roof. Fink walked. He built an entirely separate setup from scratch, and he called it BlackRock. One break, two empires. BlackRock went up into the data layer and the algorithms. Blackstone went down into the concrete and the physical infrastructure. When they split, Blackstone was sitting at roughly $250 million. Today, it manages $1.2 trillion. To put that in perspective, 1.2 trillion seconds is 38,000 years. That's the scale of capital Schwarzman is moving into the physical world. And the moment that made it crystal clear just how aggressive that strategy was going to get happened in the wreckage of the 2008 financial crisis. 2008. The American housing market collapses. Millions of families lose their homes. Most of the world saw a tragedy. Blackstone saw an inventory list. Between 2012 and 2019, through a vehicle called Invitation Homes, Blackstone bought over 80,000 single-family houses across the United States. Not one by one, entire zip codes all at once. They didn't buy them to sell. They bought them to hold, permanently. To do this, they deployed a software called YieldStar, an algorithm designed to change rent prices in real time. Most investment funds operate on a 10-year timer, forced to sell assets when the clock runs out. Schwarzman saw this as a fundamental flaw, so Blackstone engineered a solution: permanent capital. Through vehicles like BREIT, they created investment structures with no mandatory exit date. Rents flow, returns compound, but there is no countdown. Then they applied the exact same logic to logistics warehouses, and now to data centers. In 2025, Blackstone committed over $70 billion toward global data center infrastructure. Think about the pattern, because it is exact. In 2008, they bought the homes. In 2012, they bought the warehouses. In 2025, they bought the data centers. Every time a new technological wave creates a new category of unavoidable infrastructure. Blackstone moves first, and here is the paradox. Blackstone has never broken a law. In fact, public pension funds are among their largest investors, which means the very people being priced out of the housing market are quite possibly funding the entity doing the pricing. Is this model a masterclass in financial strategy, or proof that the rules of capitalism need to be rewritten? Drop your answer in the comments. Because what comes next is the hidden system that makes this impossible to undo. Here's the mechanism almost. No financial analysis ever walks you through properly. Blackstone doesn't just own assets. It owns the whole setup that values, finances, and protects those same assets, all at the same time. It works like a closed loop. Pension funds give money to Blackstone to buy buildings. Those buildings kick off rental income that flows back to the pension funds. But it goes deeper. Blackstone also controls how those assets get valued. Inside BREIT, asset numbers are set internally by Blackstone itself, allowing them to report stable values, even when the broader real estate market is getting hammered. And then, there's the shadow banking layer. When Blackstone runs low on its own capital, it becomes the bank. Through its credit arm, Blackstone lends billions to corporate tenants. Think about the structure. A company borrows from Blackstone's credit arm. That same company runs its operations out of a building owned by Blackstone's real estate arm, which sits inside a logistics network that Blackstone's infrastructure arm controls. The tenant, the landlord, the bank, all the exact same entity, clipping a toll at every single layer of the same transaction. This isn't a web, it's a circulatory system, and Blackstone isn't a player inside it. Blackstone is the circulatory system. This strategy is available to anyone who understands it. It rests on one distinction: the difference between being a consumer of assets and being an owner of assets that others cannot stop consuming. In the economy, there are players and the house. Players chase trends. The house designs the game. So what does this mean for you? First, understand public REITs. Traded vehicles allow you to own fractional stakes in the exact same assets. Companies like Prologis own logistics real estate. Digital Realty owns data center infrastructure. Blackstone enters through a $40 million minimum. You enter through a brokerage account. Owning a piece of the toll road is still owning a piece of the toll road. Second, think in necessities, not trends. The biggest mistake investors make is chasing the exciting layer, the AI model, the viral stock. Blackstone bought what the exciting layer cannot function without: energy, water, essential logistics. Ask yourself two questions every time. Am I chasing the trend? Or am I looking at what the trend can't exist without? The answer is the difference between being a player and being the structure the game runs on. Every single time a new wave of human necessity shows up, Blackstone moves to lock down the physical layer underneath it. Housing, logistics, healthcare, and now, data centers. The building where you sleep, the warehouse behind your deliveries, and the server processing your financial data are increasingly owned by the same category of permanent capital. This isn't a dystopian fantasy. It's the logical endpoint of a strategy compounding for 4 decades. Artificial intelligence is an infrastructure multiplier. You cannot run intelligence in the cloud without something physical underneath it. Blackstone already owns the real estate layer. Now they are locking down the data centers. The future isn't being built by governments or voters. It's being built by capital allocation decisions made inside rooms at firms like Blackstone. Understanding that isn't pessimism. It's the beginning of a more accurate map. The highest level of power in any economic system is never about owning the most valuable thing inside it. It's about owning the layer that everything valuable has to pass through. Growth is temporary. Necessity is permanent. The railroads owned the only route to the market. Standard Oil locked down the pipelines. Blackstone won by understanding that the asset that can't be disrupted is the one people can't stop needing. Does Blackstone secretly own your daily life? Not all of it. Not yet. But the line between owning your life and owning the systems your life runs on is getting harder to draw every single year. If this video shifted how you see the system, subscribe to Titan Theory. One video a week, no noise. Just the hidden architecture of the world's most powerful empires. We just spent this video on a company that bought the system by locking down physical infrastructure. The next video is about something completely different. A man who was rejected by that same system 5,126 times. One engineer. One obsession. One conviction that wouldn't die. James Dyson didn't buy infrastructure or warehouses. He built something that couldn't be copied. And after 5,126 failed attempts, he built an empire on top of it. The story of how a titan gets made not from capital or connections, but from absolute magnificent stubbornness. That's next. You don't want to miss it. Titan Theory. Most people see the surface. We show you the system,